Production costs for U.S. manufacturers surged in July, raising concerns that higher prices could soon be passed on to consumers. According to new data from the Bureau of Labor Statistics, the Producer Price Index, PPI, which tracks the average change in prices paid to producers, jumped 0.9% from June, the steepest monthly gain since June 2022. This pushed the annual rate up to 3.3%. Economists had expected far smaller increases of just 0.2% monthly and 2.4% annually. Producers are starting to feel the inflation fire heat, said Chris Rupke, chief economist at FWD Bonds. It's only a matter of time before higher tariff-related costs are passed on to inflation-wary consumers. The market reaction was swift. The Dow Jones Industrial Average dropped 175 points, 0.4%, at Thursday's open, while the S&P 500 fell 0.35% and the Nasdaq Composite slipped 0.3%. Earlier this week, Consumer Price Index (CPI) data for July showed that falling gas prices helped restrain overall consumer inflation, but goods impacted by tariffs continued to climb in cost. The large spike in PPI this morning shows inflation is coursing through the economy, even if it hasn't been felt by consumers yet, said Chris Zaccarelli, chief investment officer at Northlight Asset Management. Given the benign CPI numbers on Tuesday, this is a most unwelcome upside surprise and could temper expectations for a guaranteed rate cut next month. Traders have since reduced bets that the Federal Reserve will lower interest rates at its September meeting. Excluding food and energy, core PPI also rose 0.9% in July, pushing the annual rate to 3.7%, the highest since March.